Futures trading involves substantial risk of loss and may not be suitable for all investors.
Good morning. It's Monday, November 6th, about 6 a.m. Central Time. Overnight, the precious metals are mixed after Friday's stronger session. You have gold down $5, $19.94. Silver up 5 cents, $23.34. Copper's up 3 at $3.71, and platinum down 2 at $9.42. So a few things that we're watching here. One, we might have seen peak rates, especially after that dovish FOMC meeting, and you have the dollar index. It's the weakest in over a month. So if you look at that chart on the dollar, breaking down pretty hard. You got to go back to about September 20th to see where it was at this level and what was going on at that point. So looking at the latest commitment of traders report, we did see an exodus on silver. They took down about 842 contracts. There's only 31,942. That's the non-commercials and non-reportables on the long side. Gold did have a big bump up, about 20,000 contracts to 190,000, but I really believe that without that lack of follow through to the upside, you're going to see a lot of those traders, they come out of that market, they go into other things like the NASDAQ, which is peaking together. Again, it's about its sixth straight day here up. So looking at breaking down the technicals and a couple things I'm watching this week, it's a pretty quiet day, quiet week. We've got Powell. He speaks on Wednesday and Thursday. See if he does anything there. But otherwise, on the economic front, there's just not a lot out there. You got consumer credit, U.S. trade balance, wholesale trade data, but just nothing really. The crop production report, that'll probably be the highlight of the week here for me personally as a commodity guy. So looking at the current trends here, gold is bullish, but you got a few things you got to watch here. One, your key level support on gold, 200-day moving average, 1983. Your 50-day moving average below that, it's going to be 1950, 1944, and then the trend reversal point at 1936. So your resistance point, it's clear. It's that last Friday, whatever's high at 2020. Can't get over that, party's over for gold. It's probably going to go a lot lower. You look at silver, neutral right now on the trend. Silver's looking a little bit better, especially given the strength in the copper market and the slight upside breakout. If you do get some industrial production picking up, things like that, you'll see silver start to track copper and things high. Remember, 54% of silver's demand is industrial demand. Do not forget that. So you look at the current trend, again, neutral. Your first resistance point is going to be your 200-day moving average, 23.85. Really, we got to close over 23.40 to spark some interest in the trend following funds. That'll flip it to a bullish trend. They'll start to get long on any kind of breakdown. They'll buy those dips. Your key level support here, the 50-day moving average, 23.07, and then again those two trend reversal points, 23.40 on the upside, 22.36 on the downside. If you look at the outside markets, they're stronger. 6 straight gain on U.S. equities, unbelievable given the circumstances that are going on right now. You have crude oil up $1 at 81.68, the dollar index down 12 at 104.73, and then your 10-year treasury yields up 3 at 4.58. Remember, they were trading between 4.81 and 5% forever. You had these massive breakdowns in here. So we'll see how it reacts, especially on the 10-year treasuries. That could really weigh into the market, especially if they get any kind of hint that Powell is going to raise rates again on the December meeting. If you got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.